I thought I was live this whole time. I thought I was live this whole time. I forgot to hit the go live button. I forgot to hit the go live button. I finished half of the video already. Finished half of the video already. Ah, that's so sad. Anyways, I guess we'll start again. We'll start again. We'll watch the video again. Um, Where was I? Okay, let's start all over. Welcome to the latest episode or the newest addition to the TraderPrad stream over here. We're now going to be looking for Sunday night 6 o'clock or so. Obviously today 6:30. I thought I was already live. I've been talking to myself, talking to the chat. Was talking to Dieter and everybody, but this whole time I was talking to nobody because I wasn't even live. So that was amazing. That was absolutely amazing. Thank you, Dieter, for saying technical difficulty with the stream. Otherwise, without that, I would have basically finished the whole stream and not even known about it. That would have been very upsetting. What's on store today for the stream? Let's talk about that real quick. So the plan of these weekend streams are basically kind of like what we do every single stream where we prep for the next week, but this one's kind of prep for the next day, but this one's kind of preparing for the whole week, right? We got earnings coming up, and one cannot be prepared enough. Lots of fun activities coming up during earnings season, so we'll watch that and we'll get that bad boy going. Before we do that, though, I quickly want to talk about something that Dieter did. That's why you see me posting in the chat the little trade write up template. Thank you to Dieter. Dieter has been putting in the work recently. He posted a trade write up template of a stock that he would have taken. So I'm gonna quickly take a look at this write up, or take a look at this picture, and then we'll talk about that one and how I would like Dieter to do a little bit different on that one. That's why the template comes into play on the chat. But yeah, we'll take a look at that, and then we'll watch a video about how to exit our stocks better, how to hold our stocks better. Quick disclaimer, I just finished half of that video already. Sadly, I thought I was already live, but we were not live, so we'll rewatch that video, and I'll actually have some good comments to give throughout the first half of the video, because since I already saw it. But we'll watch that video together, and then we'll kind of go through the watch list for tomorrow. So stay along for the next hour and a half or so, while the video itself is about an hour long. So we'll take a look at the hour of the video, and then probably half an hour of us talking about the trades for tomorrow and the trades for next week. Let's start off the stream. Let's get right into it. Hopefully you guys are settled in, strapped in your seatbelts, watching some Bills Mafia, some Chiefs Mafia. Is it Chiefs Mafia? But to some Bills Mafia and the Chiefs game, and keep me up to date as to who's winning, who's losing. The Detroit Lions, however, did win today. Shout out to them. Eminem's big happy, I'm sure. I'm sure Big Sean's also happy. So shout out to all the Detroit legends over there. Detroit Lions are off on a heater and off to the next round. I think yeah, let's see what happens between Bills and Chiefs next game, ladies and gentlemen. But obviously you're here for the stock market, so let's get ready to talk about the stonks over here. So the first off, we're gonna talk about this amazing trade that Dieter posted on our Discord channel. Thank you, Dieter, for posting a trade recap. I like the idea. So he's basically talking about the trade idea that we talked about recently, or we learned about recently by watching an S&B Capital video called the Bella Scalp, right? Not only was it a Bella Scalp, but it was also coupled with a bunch of other ideas too. That's why I like this trade a lot. The idea over in this trade is the stock on the off the open is on a little bit of a downtrend. You see that downtrend. He basically draws the trend line. On the trend line, he talks about how else to look for an entry. He actually doesn't enter on the break of the trend line, which would have been a way better entry in my opinion. Right? There's almost 3-4 trades for you here, Dieter, that I think you could catalog and playbook it, or as Lance would say, write them up, right? Write these trades up. There's almost 3-4 trades here for you to take part in, or add to your original trade. The first trade would be this Bella scalp. You add over here or enter your position over here somewhere by having a stop at the low a day. That's your first trade, Bella scalp. Right now you're just looking for a quick scalp with the 1R 2R type of trade. At 1R you take half your position out. At 2R maybe you take a little bit more and then you look for a bigger trade. That's your first entry. Now on your second entry is where your entry over here talks about where the stock gets above today's VWAP, pulls back to today's VWAP, shows you a little bit of weakness because it's showing you lower low, lower high, lower low, lower high. But then after going below today's VWAP, immediately pops back up on the 5-minute chart and actually closes above VWAP. That's where you look to enter. So you look to enter somewhere over here with a new stop with whatever you size got in over here, right? Let's say you got in with 100 shares over here, but then you got in with another 100 shares over here or 50 shares over here. You have a stop with 50 shares over here, and then you still have a stop at the low a day for whatever size you got in over here left in case you didn't scalp it out already, right? So this is where your second stop would be for your second entry. Then on this little pullback and pop again, this is where you could enter again with another stop at the low a day over here, not low a day, sorry, at the low of this pop, and then exit at the high a day, holding for a bigger move. So all of this is great. I like the fact that you are not only looking for the Bella scalp alone, which was awesome. You're not only looking for just purely the Bella scalp, you're also coupling it or grouping the trades along with the 5-day moving average bounce. So that's amazing. Along with the getting above today's VWAP, pulling back to today's VWAP and holding today's VWAP. That's also great. This is a great spot to enter. Don't get me wrong. But then if you do enter over here and you're looking for a bigger trade, you know, this is basically almost a reversal on the day. This is basically almost we're about to break through the high a day and go much higher. So if you're playing for that type of setup, then you get in over here and your stop is basically near the low a day, at which point it's like what, a $2 risk, and you're looking for a $4 reward. What day was this? On January 19th. Does Amazon give you that $4 reward? I think it does. It breaks the high a day and it goes a little bit higher than that, right? So not taking out, taking out all of the high a day would have been a little bit of a mistake. You can also see how on the 5-minute chart, it holds the 9 SMA into the high a day. It gets above into the high a day, holds the 9 SMA, pops up, holds the 9 SMA, then pulls back, holds the 20 SMA. So a bunch of times to hold, especially the whole time when the QQQ and the S&P 500 were breaking out. So exiting here, I would not agree with exiting the whole trade, but if this was your only entry, exiting a little bit over here and holding for a bigger would have been made sense. Now, the reason why I posted this template in there for you, Dieter, is using this template would help you a little bit more, cataloging your trades and playbooking them, trade write-ups, as it says right there in the URL, writing up your trades that you took, or trades that you didn't take, or trades that you've seen other people take and you want to emulate it because it resonates with you, their play style resonate with you. Then write those trades up, ask them how they traded it, why they traded it, why would they do what they did. If they would like to help you, then they will tell you all that information. Then you just put that information right here in that template. So what you did over here, let's say, ignore everything else I told you about entering over here with the stop or entering over here with the stop. Just write up your trade, but do it in this template. And then the more trades you see like that, where it holds the 5-day moving average, where it breaks the trend line, where it gets above today's VWAP and holds today's VWAP, not only you've seen it once, twice, 3 times, depending on how many ever times you write them up, the more times you see them, the more times you write them up, the better for you to identify right off the bat the next time you see it in the market, and then actually pull the trigger and make the trade out of it, right? And then the next point is obviously the exit strategies, which leads us directly into this video on hand for today, which talks about how to exiting positions better, how to hold your trades better, how to maximize your trades better. This is the video that we were actually going to watch on Thursday, but because of the length of this video, video. We didn't watch it on Thursday. I'm actually going to do ourselves a favor over here and put the speed of this video to 1.5, and if it seems a little fast at 1.5, I'll slow it down, and then we could get it started. Slow it down back to 1 and keep watching it back at 1. So we're gonna watch this video. It's a ultimate guide to exited strategies from a professional trade firm, S&B Capital. Most of you guys know I love watching their videos. They actually posted a new video over here, the MACD trading strategy of a market wizard. Something that maybe we could watch over here later on if we have enough time for today's stream. So let's watch this one over here real quick. I'm going to just skip through the intro part. You guys know what Mike Bellafiore talks about, his intro and so on. We love Mike, but we just seen a lot of them so far. So I'm just going to skip straight to Jeff Holden's part where we get to see what the main juicy information we get to learn from today.
Identified this trade. You passed up on any trade that really wasn't in your playbook. This trade just hit you right between the eyes. The opportunity to enter just fell right into your lap. Then the trade kind of started to work the way you wanted it to work. It started to act the way it's supposed to act based on the shot clock you have for this trade specifically. Sometimes it's just so infuriating to have it go against you after getting it so close to target. But also other times it can be so frustrating to be out of the trade early just to watch it continue to run. Today we're going to talk through 3 different styles of trades. And we're going to study ways to make advanced level trading decisions in each, focused entirely on our reasons to sell for specific trades. So we're going to start by covering the 3 types of trades we make the most. We make scalps, we make move-to-move trades, and we make trades to hold the most. Now, scalps can be primarily candlestick scalps are things that we're going to talk about today. We're not really going to get into tape scalps. They tend to have their own reasons to sell entirely, and we usually don't even want to rely on a chart for the tape scalps. For this, we want to use candlestick scalps. So we're talking about very specific candlestick patterns that give us this scalping opportunity. Move-to-move trades. These are the trades that we expect to set up and then move.
So this
and maybe
is
have a
where Dyer, you could
retracement.
actually kind of maybe watch this video for yourself later on, because he talks about Bella scalps exits too. So
then continue the
obviously we're watching this video right now, but maybe if you don't really understand what he's saying the first time, you could watch it again on your own time or whatever, and then I understand what he's talking about. But I would pay attention right now. And if you want me to slow it down, let me know, Dyer. I can slow it down.
Trades, but move-to-move trades really can be a great way to trade, especially if you're somebody who likes to let the price action develop. Trades to hold. Trades to hold can happen on different time frames. Most of the time, we talk about trades to hold as intraday trades only. But for the examples here, because of the fact that you can consider a swing trade a trade to hold, swing trade is just kind of a really long version of a trade to hold. We're going to show a couple trade to hold examples in the swing context as well. You know, these exits, none of them are specific to the trade themselves. Most traders, especially when you're starting out, you should have your own defined reasons to sell for each trade. That's the first 20 trades you take of any playbook trade should have its own very defined reasons to sell for each of those trades. The reason is because as you're adding these in, these are a little bit subjective. They're very, very powerful, but they can be a little subjective. These are just ways, what we're going to cover are just ways to make better trading decisions in the moment. They are to protect your P&L when the price action might reverse, but also to enhance your P&L when the trade really is working and doing what it should do. Overall, this category of reasons to sell is situational trading at its best. This is just situational awareness in trading. So let's get into the strategies.
So take a note of what he said so far, right? Everything, I've seen half of this video already, like 30 minutes of it. And most of it, what he talks about right now, it's a little very situational, not a little. It's very situational, and he just mentions that it's very situational. So, you know, if you are thinking about using this exactly to the key, I'd be a little careful. You know, it depends on the type of situation, the type of stock you're trading. If there is a catalyst behind it, if there's a momentum behind that stock, most of these trade exits are momentum-based exits, meaning scalping. You're entering on a candlestick breakout and you're exiting on a candlestick closing, on the higher low, higher high, some sort of a pattern like that. These are not exits for strategies that you want to hold for like a bigger move or the dream move. If you're the type of trader who's looking for that bigger dream move, or as he just talked about the hold strategies, that comes in later on in the video. So stick around for this one. At the moment, this one is just the momentum exits, the scalp exits for you scalp demons over there, the one who like to get in and get out real quick, just push your size and push out. This is for you guys, how to do that.
First with our momentum exits, and we're going to cover momentum exits specifically for candlestick scalps. So right now we're going to look at the chart of AMD, and we have a Bella scalp, a Bella fade. for AMD.
Bella
We're going to
scalp.
talk through the specifics of a prior bar low or prior bar high stop. So this would be a reason to sell when the trade is starting to work already, and you're waiting for the prior bar low to be breached if you're long, or the prior bar high to be breached if you're short. The chart we're looking at, we're talking about a Bella fade on the short side. So you can see how the price action comes in, and we get this really nice squeeze, and then we start to get the roll. Once the move starts to accelerate, right, as we're talking about this consolidation.
So where you would enter on this trade technically, so this is a 1 minute chart, right? You maybe draw the trend line right over here. You see the trend line breaking after the initial 1, 2, 3, 4, 1, 2, 3, 4, 5 green, basically initial 5 minute opening range coming in, the 5 minute opening range high not being able to being breached. You get a little bit of a pullback. So on the break of that trend line, you possibly enter here with the stop right there. That's the Bella scalp entry right there, right? Or you could also enter somewhere in here. You see the original sell coming in, but the original sell gets a immediate reaction of a buy, but that immediate reaction of a buy gets met with even more selling. So think of it like a fight, right? There's a fighter on each side. They're fighting right now, but this side's bigger. This is a 300-pound gorilla, whereas this is just a little chihuahua. And the chihuahua does not have enough barking pressure compared to a big-ass 300-pound gorilla who's about to beat the shit out of this chihuahua downside. So now you're getting an instant down pressure. Now you can basically enter down here, in my opinion, which is a way better entry than taking that initial entry, in my opinion, right? Taking the entry over here, which is a way better entry. Your stop could be here, your soft stop, which is somewhere over here, meaning if the stock is able to bounce back off of VWAP, go back into this high, not really find that seller pressure really being strong. Technically it shouldn't, because you're seeing that seller being strong and chased down, buyers running away from the position, bidders pulling their bids away from the market. So that causes this whole move to the downside. That's why you're seeing that move to the downside happen and no real pop after on. But if that pop did come in, that would be kind of negating this whole move to the downside, and there's possibly a bigger move to the upside. So that's when you possibly close your trade a little bit over here and your full trade over here. Maybe look for a little bit of a pullback and hold to go back long. But if that pullback is met with more resistance over here, there's a good chance you get a little bit of sideways action until the buyer or the seller is exhausted. So you wait for that. But however, coming back to this trade, you enter somewhere over here, and he now talks about how to possibly exit on this position.
Consolidation area right in here. As the move starts to accelerate, we have no idea, no concept of how long this move could last. The best thing about trading is we don't really have to predict. Some people will say use price targets, but this is a situation where the trade is working. It's doing exactly what it should do. So a really nice way to stick with this trade, this momentum trade, is by looking at the close of the prior bar. If the bar closes above the prior bar high, that's the first time we have to take our position off. So we can walk through this bar by bar. Okay, we get our momentum here starting, and these are equal. The close is right there. It's below the prior bar open. There we go. Keep moving down, keep moving down, keep moving down. Again, we get a wick up, but it doesn't close above the prior bar high. Then we get another move lower, another move lower. We get another wick up, but it doesn't close above the prior bar high. Then we get a move down, and finally we get a close above a prior bar high. Now that can be a very effective and very tight way to manage your risk for a reason to sell. This is one of the most aggressive ways to manage your risk for a reason to sell, is just trail it down, trail it down, trail it down, trail it down. Finally, when that bar closes, you're stopped out of your position. Our second strategy that we can use for momentum trading.
So that's a quick little momentum exit over there. You just trail your stocks down. If you're short, basically you don't want to see the stock closing higher than the previous bar. He shows it on the 1 minute. I like it more on the 2 minute. Patterns are always better on a higher time frame. The 1 minute's great for a quick scalper, just a quick in and out, get in, get out, just a hit and run, and you're done, right? But if you like to hold the trade for a little bit longer, you gotta maybe zoom out a little bit, right? So if your pattern is working on a 5 minute is a better breakout, a better entry, you can kind of hold the trade a little bit longer and also see if your higher bar or whatever is showing up over there. You might miss out on a little bit of a quicker exit, which gives you more profits in case the stock is turning around, but sometimes it'll give you the bigger meat of the move. So it just depends on how long you plan to hold the trade, how it's your time frame of your trade, how much of a shot clock you give your stock when it's working for you, how much of a shot clock you give the stock when it's not working for you, and so on. So it's a decent idea over there to exiting on the lower lower, a higher low, higher high, or a lower high break of the candles. Next one is first green bar or the red bar after seeing a trend going into your favor.
Bar or the first red bar strategy. In this trade, we're looking at a second chance scalp long, right? We get this break, we get the retest, and then we're looking for the momentum to continue to the upside. But we're going to use a first red bar strategy, right? We do this especially in when we have real momentum in kind of a squeezy name. So this name on this day in particular was very squeezy price action, high short interest, kind of a nice up move. And what we're trying to do is we're trying to protect it from coming against us. You know, when you get this sort of squeezy price action, you can get a quick, hard dropout. And so we're using this first red bar strategy as a way to get out of the trade quickly. As soon as the momentum kind of stalls or pauses, we'll get out of the trade. So you can just stick with it as long as you have green bars after you've entered the trade. So we'll take it back and we'll walk through this starting bar by bar. And we'll talk about the exact spot to exit the trade. So we get one bar forward and we're in our trade. Okay. We're waiting for a red bar. We get, you know, kind of a down move, but then we get that green.
So he's talking about right here. You see 1, 2, 3, 4. Is that even a red bar? Anyways, 1, 2, 3, 4, 5, 6 red bars in a row. After 6 red bars in a row, a green bar comes in. You can kind of draw this trend line over here too, and you can see it kind of comes in above the trend line. Kind of reclaims this 9 SMA too. I'm guessing that's the 9 SMA. Yeah, that's the 9 EMA. 9 EMA SMA, I guess. Yeah, 9 EMA over here, which is the exponential moving average on the 1 minute. It also reclaims the 9 EMA. So he's saying basically enter after the first red bar is turned into a green bar, which it does so over here. You enter somewhere in this candle or this candle, and then your first exit criteria is on the first red bar that shows
down
up.
Move, then we get a green bar. Down move, then we get a green bar. We keep moving our stop up, waiting for a red bar to close, and if a red bar closes, we're out of our position. Nice up move, a little hesitation, okay? There's hesitation there, but we didn't get a red bar. We're ready to exit, and we get a red bar, so we're out of our trade. All right, we just rode that momentum all the way up. Usually we would want to kind of work our way out of the trade, or a lot of people would say, oh, I'm looking for this price target or that price target. This trade was just doing exactly what it should do.
This is just a quick scalp trade, right? Just a simple quick scalp entry. You're maybe entering it based on the trend line. Maybe you're entering it because the stock has a higher RVOL on the day, maybe, right? I'm not really sure why he's trading Virgin Galactic on this specific day when the stock is at $4 or $5 or whatever. But let's say it has a specific catalyst. Let's say it has a higher RVOL on this day. Blah, 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 blah. There's a reason to look at it. And he might have missed the original pump up through $5. You see $5 getting reclaimed. He sees $5 having a little bit of a fight off the open. There's about 10 minutes done around $5, and then after that we get a nice little breakout above $5. So that analogy of the gorilla and the chihuahua. The chihuahua was the seller and the gorilla was the buyer. The gorilla ended up beating the shit out of the chihuahua, and they started going up higher. So now after getting a little bit of a pullback, seeing you can buy the pullback. So you could have drawn the trend line for the pullback. You could have just waited for the pullback back into $5 and see where the buying comes back in. You don't try to anticipate the buy. You wait for the buying to show up and then get in and then look for the exit strategy. This one's obviously a very quick and very quick in and very quick out. You're holding this trade for maximum like what, 1, 2, let's say you get in or here 1, 2, 3, 4, 5, 6, 7 minutes, 8 minutes at best. So I mean, you're getting a decent amount of win out of that stock. But where is your stop for this? Maybe over here, maybe over here, maybe at the break of below $5 under VWAP. At that point, yeah, okay, maybe 6 cents of risk and you're getting 30 cents of reward. It's actually a great risk reward trade. But you know, the reason to get in this stock is not really mentioned. I would like that to be kind of explained a little bit more, but I guess this is more the exit strategy kind of conversation being had. So I guess that's something that we would just have to move on with right now. But yeah, good little volume coming in, exiting on the fail of a higher high, keep on coming in, failure of more green candles being shown up, big volume candle not met with with another big volume candle right away, and a little bit of exhaustion coming into the position, so a good little reason to exit out of that one. But once again, very quick, very quick in and quick out trade.
The volume was increasing. We were seeing that squeeze. And so we could just stay with it until we get our first red bar. I don't really care what happens to the trade after that. I've ridden the momentum. Now I can be out of the trade. I've protected myself from this kind of coming all the way back against me with one other big red bar. Now we're going to talk about kind of an extreme blow off. We can call it
dinner's ready,
right? It's a very simple but very opportunistic exit. When you see it, you definitely want to take profits and you want to be done with the trade. We're assuming there's no fresh news in the trade, and we're making a couple other assumptions as well. Ideally that, this price action is already a little bit extended before we take this ding extreme blow off with the 921 trade. You can think about it like, turkey and the little temperature thing pops out of the turkey at the end of it, right? Tell you that dinner's ready. This is an extreme blow off, and we just see this pop right off at the end. So let's look at Bitcoin, and we're going to look specifically
I don't know what he's talking about when he says the
9 EMA
turkey.
reclaim scalp, right? So you can make these
Probably
little scalps from time to time.
turkey
And this is just a
dinners.
really good example of like a 9 EMA reclaim, right? So we get the breakout, and we're starting to trend, and then we get a dip and then a reclaim. So we'll start to play it right from here, and we'll move forward to do the ding dinner's ready sort of replay. So
All right.
price action looks like it might reclaim. That can be an entry, stop below the low there. Very simple, straightforward, pure momentum scalp type trading. We get the nice up move. Okay, we're now above. That's great. Our stop is the low. We're kind of looking for some sort of blow off move.
Yeah, see,
really know
so
what.
the last trade, the Virgin Galactic, he didn't really mention that. This is also like that Virgin Galactic trade. You get that 1, 2, 3, 4, 5 red candles in a row. You get the first green candle, but look how he talks about waiting for the 9 SMA to get reclaimed, right? He was talking about the 9 SMA reclaimed a little bit. So now the 9 SMA, 9 EMA, whatever you want to call it, it's not going to be off by too much, but the 9 EMA gets reclaimed. This is where you look to enter with your stop right at the low of these candles, and the 9 SMA or 9 EMA gets reclaimed, and it still keeps on just going up. And the exit strategy is called ding dinner's ready, which we're going to find out what it is.
We want to give it time and an opportunity to blow off. Well, what sort of price action are we looking for it to really blow off? That wasn't really it. We never saw volume, but now we're trying to see, okay, boom. We got a big move on big volume. Dinner's ready. Ding. We take our trade, take our exit, and move on. We don't know what's going to happen next, but it's already extended, and then we get that sort of price action.
Very situational.
That is a really good way to
very
exit a trade
situational. The chance of this happening in your trades are pretty low. This is a very news-based or random out of the blue trade situation. Not saying that it won't happen. There's chances that this will happen, especially with earnings trades coming up very soon. So this is possibility, but this is a very situational exit.
With that sort of blow-off candle. It's just the turkey, the temperature gauge is popping out of it. It's done. Move on. We're going to call this next reason to sell a double stuff. This is one where the price action looks like
the Oreos,
but it gives you a double stuff, and it tells you that the trade's probably not going to be working. So this is a good reason to sell.
Trade is not going to be working.
But it just doesn't get to your target.
Okay.
You actually get a double stuff, and that's the end of the trade right there. You don't want to let it come back against you. You want to be out. You want to move on. So let's talk about a backside trade in AI. So we had the nice bounce up, and we'll start the chart from right about here, where the backside trade really kind of does start. So we get this nice up move, and our target's VWAP, remember? So we expect, at this point, we definitely expect it to go to VWAP. It looks pretty good, actually. The volume's starting to creep up. Everything about this trade is telling us that it's going to work. We have no reason to make any adjustments whatsoever. We get a down move, but that's not even a stuff. That's just more of a pause, and we would expect that last little rush up to make it to VWAP. Okay, so now we're starting to see the potential of a pullback here, and I don't like that pullback, but if we see this, what do I think should happen? Okay, it should clear this level, and it should go right to target, right? Okay, looking really good. We're almost to target. That's great. Oh, wow, this is really going to work. Oh, man. Okay. And then right there, you see that up move that looks like it should go right here, and it doesn't. Now we've been stuffed 2 times, almost 3. I wouldn't count this as really a stuff, but that third one definitely, there's no reason for sellers to be right there. Price should have just exploded right through VWAP, and it didn't. As much as I want to hope that this trade goes all the way up here, we just had a double stuff. And we're very unlikely to get it higher at this point. So I'm going to exit my trade. That's going to be my reason to sell, so I can protect the profit that I have, because I don't want to let it come back against me. I want to be out and just move on. Now let's step into some move-to-move trades and some reasons to sell.
That was a quick little one over there on just like, you expecting VWAP from the trade, but you're not really getting VWAP out of it. You're seeing the stock pushed into the north side. It pushes up the first time, rejects. It pushes up the second time, rejects. Pushes up the third time above the second time, but rejects that again and pushes straight back to the downside. And those rejects, constant rejects right below VWAP, showing you that there's a seller around VWAP, and there should be no sellers around VWAP if the stock really has a good mean reversion from the bottom of this consolidation area, intraday lows, back into the move to VWAP or back above VWAP or so on. So the fact that someone's still selling VWAP could be some sort of an algorithm, some sort of a hedge fund manager, some sort of a hedge fund intern, whoever it is, pushing those keys, taking those fills right around VWAP area. Clearly there's still selling pressure on this position, so it's time for you to GTFO from those lows that you just got into, because there is no more move above VWAP for this position that you might be looking out for. So watch out for that, and then immediately block in your profits and walk away. Now comes the move-to-move trades, exit strategies, something that more I'm interested into. So let's take a look at these ones.
Trades. Move-to-move trades are a little more trending than candlestick scalps, which are typically momentum-oriented. So our move-to-move trades, the reasons to sell.
John says, "Wow, I did not know you were on Sunday. I didn't know either, but I am today. I probably will plan to be on Sundays moving forward. Something that we will do where we can watch videos like this to learn off of, and then probably even chart a little bit for the next day and for the next week. So yeah, glad you could join us, John." But I know a lot of people are more interested in watching the Bills game, most likely. So I won't fault you guys for not being here, but I appreciate every single one who's taking that time out of your day to be here to talk about the stock market on a Sunday. Practice? We're talking practice.
Away from a little bit, and then it sort of come back. We're in a move-to-move trade. We had a really good break with volume. The volume stayed up there. So everything we have in this trade looks really good. We get our break, and then we get our first touch. So we have a trend line that's developed. But then we start to get this acceleration from the trend line. Well, what do we do at this point? Okay, well, I don't want to use this trend line that's way down here as we start to accelerate higher. So I'm just going to draw a graduated trend line.
Okay,
and I'm going to
so
start that graduated
trend line,
accelerated trend line from this move. And when I get that pull in, then I'm going to move my trend line up here, right? As soon as we start to go, you could draw it there if you wanted to. You could draw it on the lows of this. That's fine too. It doesn't really matter. But when you get an acceleration from a trend line, just redraw a more aggressive trend line and use that second accelerated trend line as your exit. We're not talking about being perfect here. These aren't exact reasons to sell. These are guides. When the stock is really paying you well, stick with it as long as you possibly can and understand what your reason to sell is. This example of an accelerated trend line.
Okay, yeah, so once again, the reason to even look at the stock, what is the stock? VCI, no clue what the stock is. Probably doing a high elevated R vol. This looks like the daily chart right here at the bottom low corner. Looks like it made a pop not too long ago. If this was today's chart, this was yesterday, the day before that, the day before that, not too long ago. It made a nice little pop up, and look what it did last time. It made a little bit of a pop up. Last time it made a pop, it just died off. This time it made a pop, but it's still gradually pushing up to the north side. So maybe some sort of a small cap that showed up on his radar, and with a decent enough of a high R vol or volume behind it, made him take a look at it. The stock is now taking out what looks like yesterday's high, or even the day before that's high, around $5. If you draw the trend line, it is holding that trend line. So I guess like that's the reason to enter. Like I would like SMB Capital to talk about this a little bit more, but I guess you know this is only about exits, so I understand them not really mentioning where to enter, where to exit. But if I was to speculate where the entry is coming in, or the reason to take a look at the stock, that would possibly be the reason. That's the daily chart down there, and the possible entry is somewhere over here after the stock pops up off the open. This is the whole opening drive, 9:30 till 10:30. The stock does nothing. After 10:30, it kind of gets above $5, and maybe shows up on your alert saying, hey, the stock broke $5 somewhere over here. Instead of taking the original $5 breakout, which you could have missed out, or maybe even if you were keeping your eyes on it, you could have waited for the pullback and drawn your trend line over here. Maybe, yeah, you don't even get to draw the trend line, but okay, let's say you wait for the pullback and the pullback shows up. After the pullback shows up and the clear buying shows up back above $5, you can draw in your trend line. You can enter somewhere here near $5. You stop over here, and now you're looking for those exit strategies. So clearly you're looking for maybe the break of this trend line, maybe you're looking for that previous strategy that he has talked about, the stock holding below the previous close of the candles or something like that, and see if the stock is giving you a reason to exit. No real reason to exit yet. A breakout and a continuation of this move, and more volume still pouring in compared to the open. We're getting about the same amount of volume that we were getting off the open, which is pretty surprising, around 10, 11 o'clock or so. So clearly whoever the buyer is, they're being very active and they're soaking up the shares. Now you're getting a bigger elevated trend line. You can draw a new trend line, as he just mentioned in the chart or in the video. Draw a new trend line. You can possibly exit like 25, 30, 50%, whatever your goal is. You're already, multiple risk to rewards. You're probably risking 5 cents, 10 cents, 50 cents on this break over here. Not much, but you're already, multiple dollars in the money. So your risk to rewards also, 3, 4, 5, 6, 7 times maybe, depending on what you're risking over there. So taking a good amount over here would not hurt you, and taking more out on the break over here would not hurt you. This is what I would say though, somewhere around $11 would be a good tape read area, in case you weren't tape reading the stock around $11. If you were recording the stock level 2, you could see how it pushes into 11 and immediately gets back under 11, cannot hold 11 on the bids. The buyers are not there to buy up $11. Once again, it tries to push to 11 and higher than 11, but no buyers around 11 or higher than 11. So immediately the stock flushes right back down. Once again, tries that for the next few minutes and just not able to show buyers above 11. This is a good area to tape read exit, right? Exit by using tape read. The good exit obviously for us is on the break of this trend line according to this video. So you might exit most of your trade over here, or some of your trade or most of your trade over here. The next spot would be somewhere down over here after the stock, once again, a tape read exit. Not able to hold 11 on the bids, not able to hold 10 on the bids. So more reasons to, let's say if this was your first exit, this would be where you should exit most of your trade, on the failure to hold 10 on the bids after clearly failing to hold 11 on the bids. But let's continue watching, see what he talks about these trend lines.
You can draw a trend line however you want to, but when it accelerates away from the dominating trend line, this trend line right here, this clean price action, when you get that acceleration away from it, that's where you want to draw a more aggressive trend line and stay with the stock until that trend line breaks. As soon as that trend line breaks, you actually have a reason to sell. So let's go through this bar by bar example. All right, so now we have a pretty clear trend line that we can draw. We can start at this point and go here, or we can start at this point and go here. Totally up to you, however you want to draw it.
So yeah, he pulled the chart back. As you see, the stock just broke $5. After breaking $5, comes back, pulls back, and that's where he's drawing the trend line.
Boom,
okay, yeah, see?
Is the dominant trend. We had an acceleration away from it, and then a pullback. Okay, we'll keep playing it forward. Well, now we're not pulling back to that trend line. We're just holding sideways. Well, what if we break up higher? Well, do I still want my stop to be the trend, or do I want my stop to be some arbitrary price target? Well, I'm seeing the volume that's working in this trade. I mean, I want to give it as long as it possibly can. So what could I do? Well, I could draw an accelerated trend line from here if I wanted to.
Got to remember, though, trend lines are very subjective, right? Very subjective. See what happens.
Well, that worked. All right, great. Now I'm waiting for that accelerated trend line to break. But what happened again? Well, now it's accelerating.
They're not really objective at all.
What could you do? You could draw another accelerated trend line if you wanted to.
If I wanted to. That's a very good word to kind of understand the way he used it. If I wanted to, right? Subjective.
And then finally, you would get stopped out on that now third accelerated trend line here. Usually, you just like to see 2 accelerated trend lines. In this case, we get a third. But look at how much longer you can just stay with the stock by just allowing that to work, right? Again, the premise here is when you get acceleration away from your first trend line.
Staying with the trend allows you to
wait until that trend line breaks. If it doesn't break, and in this case, you get more acceleration, you can draw a third trend line. A third trend line is pretty rare. Usually, it's just 2 trend lines. But in this case, this worked. It kept you in the trade for longer because the trade was doing exactly what it should have been doing for you to stay in it. So now we're going to use the 21 EMA.
EMA breaks, 21.
This is a move-to-move trade. We had this up move, pull in. Nice VWAP reclaim trade, right? VWAP's this purple line. And then we start to see the price action accelerating. So some people use the 9 EMA close, but for a move-to-move trade in particular, I like to stay with it, or we like to stay with it longer. So you're really looking for a defined close below the 21 EMA. So the 21 versus the 9, the 21's a little longer. You can get a little more movement away from it. Really, the 21 EMA can tell you a lot about the sustainability of a stock. So when you're trading move to move, you want to be giving it a little bit of room to breathe. You want to be letting it work. In this case, the stock was doing exactly what
I'm gonna just change them all to EMAs right now. Hold up. There we go. Save. Okay, now go back to the video.
what you wanted to do for a VWAP reclaim, which is it kind of dipped and then reclaimed, started to hold above VWAP, and then started to trend higher. So to stay with that trend for the move to move trade, all you have to do is use a 21 EMA or whatever moving average you want to do, but I prefer the 21, and let that be a guide. Again, this is specific to move trading. We're going to walk it through and kind of see how this could have just kept you in the trade when you recognize the trade was doing exactly what it should be doing. So now we have an entry, or let's assume we have an entry here, right? We get the nice reclaim of VWAP, dip out, clean hold, and then we get what we're hoping will be the assumption of the trend. A lot of people would just be targeting the top of this, but let's see what happens, depending on the variables involved. Okay, well, we're starting to see volume start to come in. That's very good for our trade. But do I want to exit right there at the top? I don't really think so, because I really think that with the way this stock is trading now, this could actually trend much further than that. So I'm going to adjust my reason to...
Everything from this part on from the video I actually haven't seen. I thought I finished 30 minutes of the video, but I only finished like 16 minutes of the video apparently. So yeah, this is all going to be actual reacting. So let's keep on watching.
Sell, and as the price action moves in my favor, I'm just going to trail it up using this 21 EMA. And what I'm going to look for specifically is a close below the 21 EMA. You could use the 9 if you were doing an accelerated trend, but that's more of a momentum type scalp. The 21 is really that guide for a really good trend. So we'll use the 21 EMA. And yeah, I could have made a really nice scalp taking this trade, and then right as it moved up, I could have sold everything, and that would have been great. But I think there's more there. So I'm going to stick with this 21 EMA, and we're starting to get accelerated away from it. But I'm not too worried about it, because I really think
the 21 is the lower one too, right?
We're not there. Okay,
yeah, it's the lower
closer,
one.
But again,
the blue one's the 9.
EMA. I'm waiting for a close below the 21 EMA. That's that green line. Keep getting close. We keep getting close. We're closing right on it. Okay, we're closed below it, but it's so close. Okay, all right. I'm out of my trade. But instead of taking the trade just to here, which would have been the natural profit target, I was able to just stay in the trade until it went up almost double where it went from before. All I had to do was just use the appropriate reason to sell for a stock that was doing exactly what it should do. I don't care if it's the exact top. I don't care if it's, going to go higher or lower. I just did more than what I could have done simply by having this other reason to sell. You can do the first higher high or first lower low when something starts to trend. This is something we talk a lot about with in our trader development meeting. When something's trending, what is the definition of trending? If it's trending to the upside, it's making higher highs and higher lows. And if it's trending to the downside, it's making lower highs and lower lows. When you recognize something as trending, anytime something's just kind of going in that direction, and you can see those distinct lower highs and lower lows in this case because of the short trade, you just want to stay with it until it fails to make a lower low. So you're going to stay with it until it makes a new higher low. So anytime price action starts to roll and makes a lower low, we're just going to stay with the trade. We'll play through this entire trade, and what's really interesting is we're going to get a higher low all the way until 1135, right in here. Now, most traders would be down and out of the trade somewhere in here, but look, we just keep making lower lows, lower lows, lower lows, lower lows, lower lows, lower low, lower low, and finally we make a higher low telling us there's the potential that this trend has changed. So this is a very simple way for a move-to-move trade in order to stay with the trade longer.
Makes sense.
Let's go bar by bar through this entire trade, which
staying with
start
the
trade way back here at almost 10 o'clock. We're going to keep moving forward in this trade. We get a nice
basically get the break of the trend somewhere here, right? You could first draw the trend line somewhere here. This is a false. It holds VWAP, holds the 9 SMA, 9 EMA, whatever that is. You draw another trend after this one. Another trend over here maybe, but that's the trend that breaks. The line right over here, that's the trend that breaks. You look to get short somewhere here with the stop at the high a day.
Down move. I mean, honestly,
short
a lot of times
here with the stop at high a day, which is what, 26.20, or even the break of that trend. So you basically enter 26.40. But let's say you get short somewhere around 26.20 to 26.40 on the pops. You get filled on the pops.
Thinking about this trade in the right way. But now all I'm looking for is, okay, we made a lower low.
And you're looking for a higher high.
We didn't make a higher high
to come in for you to get out of the short.
Okay, we have another lower low.
Higher high.
Oh, wow. This trade's actually
not
really
a higher high, right? The high's over here. Not a higher high.
Lower low at some point. It has to kind of settle down. Okay, we
Still
keep
getting
going
lower
lower,
lows.
Keep going lower.
Still
Okay.
getting lower
Now,
lows
at
and
this point,
still
I'm
getting
definitely thinking-
reject of the 9 SMA and the 21 EMA. Sorry, this guy uses EMA. I just changed mine to EMAs too. So the 9 EMA and the 21 EMAs,
All right, that
constant
was a really
rejects
good
of
trade.
it.
I don't know how much further.
Lower lows, still lower lows, but this one is a higher high coming in than a previous low, right? So you probably get out of some over
I'll let
here.
it wiggle against me. I want to let it.
You probably get some out over here. We're already near low a day. We're coming back to the 9 SMA EMA though, so that's a reason to wait. Still
Put in a
wait.
higher low.
Wait for it to close above it. Doesn't really close above it.
Low, but nope, it's not.
Still
Okay, I'll
rejects.
just stay with it.
Bang.
Okay, we put in a low. Let's see.
And it's compare in the higher low, higher high mindset too. It's still not above this area, right? After this original pop, it's still not above this area. So still not a higher high technically, because that's the original bounce. That's the original bounce. Still not higher above that. Still not higher above this. This is not higher above that. This is not higher above that. That's not higher above that. Later on, eventually, we start grinding against the 9.
Every time we break,
and then we start see how the 9 and the 21 are getting so close. Once the 9 and the 21 start getting close in whatever direction a stock is going, let's say to the upside or to the downside, if the stock is just trending in such a beautiful way, they should also be just going straight down. But once they start getting closer and closer and closer and closer, then the selling pressure is dying down and it's kind of getting ready for that reversal. Eventually, you'll see the 9 getting reclaimed and the 21 getting reclaimed, and the 9 and the 21 merging and the crossover, and then the stock getting above the 9 on the north side and then grinding above the 9 all the way back up.
Okay,
so that's a good sign to kind of flip long, right? But this is right now for the exit strategy. This is somewhere you can kind of look to exit. The higher low still hasn't come in, the higher high hasn't come in. We still haven't closed above the 21 SMA, which is still a good reason to continue holding this trade. And it just keeps on selling. Still pressure, still pressure. And see how we're popping into now into the 21 SMA compared to the 9 SMA. And we're just constantly selling in over here, constantly selling. But now we're getting a higher low, he mentioned.
Because at
so
this
let's
point,
see,
I don't care what
higher
happens.
low
I just
coming
stayed in
in.
the trade because the trade was working very, very well for me. So this was a good reason to sell for a move-to-move trade. We're going to go into some general exits, and we're going to talk about this from the context of a trade to hold and a swing trade. Now, these general exit criteria, they can be used on any time frame. We're just going to observe them and walk through them from the context of a trade to hold, intraday trade to hold, and then we'll look at one in terms of a swing trade. Now, these are two different concepts, but again, they're going to be applied anywhere you want. I can use them on my scalp sometimes. You can use them for move-to-move trades. You can even use them for multi-day, multi-week swing trades. This first one is a measured move, right? A measured move is a very simple way to look for profit targets, especially when something is moving in kind of the right way. So what we'll do is we'll look at this move. Let's assume, or let's just guess that we weren't in this SoFi trade at all. But really quickly, we could, before this pullback, right? Once we get this pullback, then we can set a general target for where we think the move might go.
So it's
as
like
it starts
a scalp
to act pretty well
measured move, basically, I'm guessing.
After observing the first leg of this trade to hold. So this first move is from 905 to 940. So 35 cents, right?
Okay.
It doesn't seem like a lot, but you can get as much size as you want in a stock like this. It's really, really liquid. So 35-cent move. Okay, now we get this pullback. And we'll look at it here. Let's assume that the pullback ends right here at this 918. All right, let's round it to 920, right? So we're looking for 35 cents from there, so it would be 55. Well, okay, maybe we got 1 cent short of it, but essentially you can treat that entire thing like a measured move. So this first up move tends to, in a lot of cases, it'll equal the second one, especially for more of trade to hold type thing. You can see how long this pullback is. It's not really a move to move setup, which is why we're talking about it as a potential trade to hold here. So let's go through this whole thing bar by bar. We'll start way back here and we'll go through it very, very quickly. Okay, so we have this period of consolidation and let's look, this break, we know this break is going to start. And what we really want to start to focus on is whether we're in the stock or not in the stock, it doesn't really matter. What we really want to focus on when we identify, let's assume we didn't even see the stock. Maybe you were in it already.
See, now I like it that he's explaining this. I like that.
I don't know. That's perfectly fine if you were. But either way, I wouldn't have been because you had, again, that double stuff and I would have been out of my trade right there. But then we kind of get this pullback. And all I'm thinking is, okay, if this is going to make another leg higher, where might that be? The reason why I'm thinking about that is it helps me identify what my risk reward is, which helps me identify what sort of probability I would really need for this trade. So if I'm thinking about, I potentially could get 35 cents in this on a measured move. Okay, so how much am I going to risk in that? Well, I'm going to have to find an area where price really sets up for me and then find a really tight spot, as tight as I possibly can to risk against. And that means not just buying down and hoping, it means actually getting a setup so I can get that continuation. Wow, we got almost a VWAP, but we didn't. Oh, that's interesting. Okay, now let's see if we can start to break out of this little consolidation. If we break higher, you know, you could just target this, but that's really only about 20 cents. I think I could get at least 35 cents, maybe more, without much significantly changing from this move. So let me wait for a break, and if I get a break higher, I'll enter the trade. Okay, I got a break higher. Now I can risk kind of down below the low of that. So that looks like 15 and a move from 22, so about 7 or 8 cents, right?
5 cent, 10
so I can
cent
really
risk.
tight, but I don't want to set some arbitrary target of just right here. I want to actually see where this can go. And in this case, I'm thinking that was a really good up move. It could potentially make a measured move up to 35 cents. So if I'm in from 20 and I'm risking,
that's your expectation, right? Now, obviously, if your expectations are not being met, like you're seeing the stock where it got double stuffed before, it get double stuffed again, or if it's not really holding the trend lines or whatever, it's creating a lower low and a lower high instead of a higher low and a higher high. Reason to exit, right? Multiple reasons to exit. That's the point of this video over here. Understand all types of exit strategies, and then see when you need to use what. Over here, obviously the original expectation of the exit is the measured move. You're expecting to hold the trade longer. You're looking for a 2 ATR move. Maybe you missed, like he said, maybe you missed the original breakout. You're seeing the stock pull back to VWAP. Find buyers above VWAP, get above the 9 SMA, whatever. Your triggers to get long are coming in. You're seeing the consolidation off the open, a pullback into that consolidation, a hold above that consolidation, and a hold above VWAP. And risking, all bullish reasons to kind of enter. But then your exits kind of now need to be, where can you expect? Your first expectation could be into higher day. But, that's already a good 2R, 3R of a trade, honestly. But he's talking about how you could kind of start with the higher expectation, maybe look for that 2 ATR move, maybe look for that 1.5 ATR of a move, and by understanding that the range of this move over here was X amount of dollars, X amount of cents, maybe you could look for that move coming in. But you can also couple that with other ideas that we just learned today, which is like, the 9 EMA, the higher low, higher high, and so on. As
the stock kind of continues to go higher, all I'm thinking is that, okay, right into that 55, that would be a
see how the 9 and the 21 crossover, and the stock basically starts holding 9. It does get below the 9 and the 21 a little bit. It gets a little scary over here, but still not right back into your entry, and still no reason for you to exit, because even if your original target wasn't high a day, we're nowhere near high a day. A new trend has come in. You basically are still playing for your stop at the moment, even after this little signal coming into the position, right? You're still waiting for your low a day, your stop to come in. Maybe you take some out on this move over here, but then you add that right back on this pop right back up. Let's say you take out 25% on this move down over here, you chicken out a little bit, but then when this move comes in, you add that 25% right back into your trade, and then you join the party one more time. Trade to hold.
Okay, now we're through. That's great. I want to see, can we get really to that high and use that measured move target? Keep going. We keep getting close. Oh, we're so close, and I would take it off there. That's pretty good, right? But a measured move target is a great way on a trade.
That's good, because obviously you're seeing how it's getting stuffed over here. You're seeing also the moving averages get close, get crossed over each other. So also it's close to your measured move target. It's very close to your measured move target.
The way the price action can trade, and you're allowing the stock to do what it needs to do. This final one is going to be a true swing trade.
Prior support resistance.
We're going to be focused a lot on the daily chart back here, and what level we're going to focus on is this 128, and why it's such an interesting level. You can see down here on the daily chart.
For those of you wondering where he's looking, it's all the way down over here in the bottom left of our screen. He's talking about this Amazon 120 daily chart, because it gaps down. After it gaps down, that gap down high gets stuffed right back to the downside, pushes up, gets a little bit of a rejection, and then a breakout, comes in, finds a little bit of a buying right above that level, pushes up, but then it breaks right back down, finds selling, pushes up, finds selling, pushes up, finds selling. Amazon sells off ever since then, and then finds its mate right back in that level. So on the daily chart, it's a significant level all the way back from 2022, May 3rd, 2022 area, and now the stock is getting back into that area somewhere around July 2023, and he's talking about that trade.
Sure. That was the gap below was just about there, and then you can see we tested that level and we failed there, so it definitely became an important resistance area, and then it went above and it acted as a support area. This is going way back.
All of that I didn't watch this part of this video. All of that I mentioned just now, he's just mentioning it. I should have probably just let him done it.
I want to identify important levels, and as price starts to respond well, I want to kind of think about where this stock can go, especially if I'm swing trading. I know most of the time they say swing trading 3-to-1 and all that stuff, but like I want to maximize my profit when a stock is acting right, particularly in this case when a market's acting right. So let's assume that, again, resistance became support at this 100 level, and maybe I got a trade set up on this little hold above 110. Right? And I'm risking down to 100 or something like that, right? Well, I knew that this 128 level was really, really important on a daily. And it's really tough to do it on any other chart. But if I'm swing trading and I knew that 128 was really important, I could have taken this trade all the way up into this resistance area and then sold right there, which it looks like people did because you can see how aggressively it was sold right there. But it's a way to use prior levels as a really important guide for where it can go. Especially
significant daily levels
or resistance levels that were very important. So when we talk about levels on the daily charts, a lot of times why we're talking about those levels is because it shows areas that have mattered to that stock in the past, and those can act as magnets. So if you're swing trading something, try and see if it'll get all the way to those magnets. You know, we're not talking about an arbitrary price in this case. We're talking about 128 because it mattered previously in the stock. So if you're going to be swing trading something, look left on the chart, identify areas that were important to this stock previously, and then see if your stock can make it all the way there. All right, we covered a lot, but overall, the objective here is to take these different reasons to sell, these various types of reasons to sell, and then apply them to your trading. So we've talked about 9, maybe 10 elite level strategies that can be situationally used by traders on our desk. And they're used every day by traders on our desk to make the most of a really good opportunity or to protect themselves when an opportunity may look good, but it's not as good as we think. So you can use these, or you can let these reasons to sell use you.
Back on the Bitcoin chart, what was the trade on that, if it's easy to pull up?
So since it was a scalp, the 9 EMA reclaim scalp, that's not in your scalping program. It's really only for really strong stocks. Sorry, I'm trying to pull it up. Here we go. All right, so 9 EMA reclaim.
9 EMA reclaim entry, okay.
No, but there's an example of it here. So 9 EMA reclaim is when you have something that starts to be strong. Let's say this is the example, right? And it dips below the 9 EMA, but doesn't really close below the 21 EMA. And then within 3 bars, typically 3 or 4 bars, gets back above the 9 EMA. This isn't the best example, but it is a good example. You're looking for continued momentum to the upside. That one was a pretty good example, the one that we did. I don't know where it was, but
no, I get it. I wasn't sure what the original trade was. But
this is a good example on the short side, right? So you get a pop up, and then it clears the 9 EMA. So anybody that was trading off the 9 EMA stopped out, but it never gets above the 21, and then it gets right back below the 9, right? So your entry is on the break of the 9, and your stop is obviously right there, right?
Yep.
And what you're looking for is exactly this sort of move, that real momentum sort of move. So you want to see increased volume, you want to see the price action accelerate, and then you're kind of taking it off. You can get this sort of weird trending action where it kind of trends after that. Like this is more like, this is actually pretty good. It just keeps going up, keeps going up, keeps going up. And I wouldn't even trail it with a 9. I would just kind of use one of the other reasons to sell. But the 9 is kind of your entry there. Make sense?
Yep.
Jeff, I had one about when we talked about waiting for, on the scalping one, on the 1 minute chart, not letting it wick you out, but waiting for it to close below the previous bar or lower high.
Yeah.
When are situations where you'd want to like actually get stopped out when it breaks? I know a lot of guys talk about the 2 minute bar break, and when it breaks right away, they're getting out. When are situations where you think it makes sense to wait for the bar to close?
If it takes out 2 or more bars, I would get out. Like on a wick, I would get out. But like it's tough because it's just like, I think I tend to
Pretty
look at the
situational.
because there's so many times that you get those big wicks and you're like, oh man, this is gonna close, and then like the sellers take it back in, and that's
The
actually
rest of it is just Q&A.
Well, when you had that space example,
Yeah.
when we were going through it slow, you'd see like down move, green bar, and I'm like,
Yeah.
I feel like it gets stopped out so often on those first down moves.
Yeah.
So it's a good point about waiting for the close.
That's why a lot of times I'll wait for the close, because of exactly what you're talking about. It can look really bad
Wait
until the
for
last
the
30 seconds,
close
last
of the
10 seconds of the
bar.
bar. But at the end of the day, when the bar closes, it looks amazing. And I always think of it this way, and this is kind of a weird concept, but you ever like, I'll use ping pong as an example, right? So like I was playing ping pong over the weekend with one of my buddies, and like I was down. I think in the first game I was down like it was like 18-7 or something like that, right? And I was down, and I came back and won.
Come on,
right?
bro. Oh,
And
there you go. Okay.
Then the second game I was down. I think it was like 15-12 or something like that, right? And I came back and won. Well, like I felt like I could have kept playing all day and just smoked him in every game after that, because he gave me everything he had, and he still couldn't get it done, right? And like I'm not saying I'm a very good ping pong player, I'm not, but like I could see the momentum like just completely shift, and he gave it everything he had, and it just didn't get the job done. And I think about that with stocks and the way things trade sometimes. That space, you'd see that downwick, and the sellers gave it everything they had to get it lower, and they just couldn't get the job done. And then again and again and again. And it's just like, when that happens, I'm actually feeling better in my long, because the sellers have already given it their best shot and they just can't get the job done. And I feel like I can stay in that stock until something really significant changes. So every time I see one of those wicks, but then the close is actually pretty decent, it gives me a little more confidence to stay with that trade.
Is that because it's effectively the same price dynamic as the stuff scalp, right? Like those stuff candles all have a similar supply and demand dynamic going on.
They do. They very much do. Where people see it wick down and really aggressive shorts will hit it, right? They'll be like, this is the top. That's it. It's going lower. And then they'll cover as soon as it lifts. Or buyers like Carter will get scared and they'll be like, oh man, I got to stop out, right? But then it goes right back up and they're like, oh, now I got to chase, right? And sorry to pick on you, Carter, but like, it's little things like that I do think I think about with regard to the way stocks trade, particularly competitive stocks and stocks that are moving like, kind of with a lot of participation.
Makes sense. Don't people talk about, like, even on a daily chart, the thing that really matters is where you close at the end of the day?
Yeah,
I mean, totally wrong, but
yeah, people talk about that a lot, and I think it matters situationally. I think the open and the close are just psychological anchor points more than anything else.
Yeah, they're just
right.
Random.
The price
points.
action over the course and the unfolding nature of the price action is really the story. The open and the close are just events, right? But people do make decisions off of the open and the close, and so they become important. But the reality is, the narrative I think matters far more than the open or the close.
Hey Jeff, question. So how do you develop the confidence in your trading to be able to stick with one of these reasons to sell? Because there's times where I might trade like a first red bar reason to sell, and it may not work as well, as I expected one or two times, and I start to lose confidence and I start to switch to something else. Maybe I switch to 9 EMA trail or whatnot. So how do you kind of stick with one throughout your 20 trade
That's a
sample?
good question.
Switch back and forth.
No, so you don't.
That's a good question.
You don't. You don't stick
to
with
it.
one through your 20 trade sample. These are after you've got your 20 trade samples done. Your first 20 trades should have defined risk reward targets for the most part, or defined really appropriate reasons to sell for the most part. You should have really clear criteria for your first 20 trades. This is once you're through it and you have confidence in the setup. Does that make sense? Did I not explain that appropriately? I could have missed that or not said it the right way. But once you know you have edge in the setup, there are times where you can actually just stay with the trade longer and you can really let it pay you. And that's why I tried to equate as many of these examples
Gotta have an
as
edge,
to trades that we already know. We already know some of the
setup.
dynamics.
Gotta have a playbook, a reason
Because
to enter
these can be things when the
trades.
stock is just working, and it just keeps working. Like if you set that arbitrary target,
break out of
that
yesterday's
reference
high,
point target,
pull back
you're
to
actually
yesterday's high,
telling the stock
whatever
how
the
much it's going to
setup
pay you versus
is.
letting it just pay you as much as it
Look
wants.
for that pattern to set
Same
up
thing
and
for
then,
that
or
backside one that
VWAP,
broke,
pull back and hold,
that double
right?
stuff. Like you're telling the stock, no, you're going to pay me to VWAP.
And then
but it's like the stock's telling you, no, I'm not. So why would you let that come all the way back against
you
Once
take
you're through your 20 trade sample, that's actually where
these
trading kind of
exit
is fun.
strategies and kind
Because
of
you can recognize, wow, this is actually working
use that to help
as well as I
you
thought, or
get
better. This is exactly
the
what I
best
want.
out of
I'm going
that
to change my
trade.
reason to sell here.
right.
I'm going to use, and the difference between the first red bar, the high or low, and the EMAs are just, they're totally different tools to apply in totally different situations.
Yeah.
And when you really know your trades, and if you take 20 of them consistently, you're going to understand when to apply what tool. So in a backside that I want to stay with, I wouldn't really use a 21 EMA from there because I actually expect there to be really good momentum for the backside. So I would use either a 1 minute bar low, or I'd use a first red bar, right? Second chance scalp. I wouldn't use a 21 EMA because it's not a trending trade. I wouldn't even use a 9 EMA because I know it can kind of wick down and come back up. And especially early on in that trade, you expect it to kind of start and then the momentum to really take off. Well, I would use a trend line, or I would use a first really big red bar, or I would use a 2 minute or 1 minute low takeout or something like that. So the reason it doesn't take long to understand what scenarios you can apply. And it really, once you get 2 or 3 of these really good trades that just kind of work, you'll understand better next time. So these aren't really things to try out and see if they work. They're things to do once you know that you have edge in that trade.
Right.
And it seems like this huge wall that you have to climb, right? How do I know if I have edge in this trade? Man, I'm gonna have to wait for 20 examples. For you guys that are actively trading in the 8 weeks that you're with us, you'll see 20 examples of probably 8 different setups. Like out of some of the scalps that you guys are learning, you can see 20 setups in a week. You can see 10 in a week sometimes. You can see, if we get a lot of volatility, you'll see 4 different scalps that each trade 15 times in a week. Like you will just get that opportunity. The challenge is being aware of it and being aware of where you are in the development phase of it.
One question for the SoFi example.
Yep.
I mean, kind of just going off what you were just talking about, what can really give you enough conviction in that trade? Like, okay, I think we're going to move this second leg up just as much as the first leg did. Like, that's just like a really strong stock. I don't know.
That's exactly why. That's a really strong stock.
Well, how do you identify that so early in the day?
That wasn't early in the day. That was a technical breakout. Right? Like so we're talking about this day right here. That was a long consolidation, right? Where was this on the daily? The 15th? So it's right here, right? So it had gapped down. It was a long consolidation. It couldn't get any lower, right? So all I'm thinking is this is a really strong stock. And even on the gap down, it couldn't even go below support at all. Like, I think this can at least go like up, but I don't know how high up, right? And I actually didn't know that it was that close. I knew it was a measured move, but I didn't know it was like literally within like pennies when I chose this example. All I was thinking about was I knew that was a measured move and that was a measured move. And that second leg tends to be a little more grindy, but like you will find these everywhere. Like if you like to trade retracements, like you will find measured moves absolutely everywhere. in a weak stock, you want to use measure moves to the downside. In a strong stock, you want to use measure moves to the upside.
A good way
all
to
you're doing is, like, just
scan for these type of trades could also be stocks that are breaking out of the opening range. How long has this been? 1 hour, almost 2 hours. Maybe you can say opening range, 30-minute opening range, 1 hour breakout with volume behind it. Then you can see the stock pull up on the scanner. You pull up the scanner, you wait for a pullback, a test of VWAP to kind of get into, and then you can look for that measured move type of trade, right? And a breakout of the opening range 30-minute or opening range 1 hour, and set up a scanner of some sorts like that to look for these measured move type of trades if you're interested in, especially if it looks something like this, then possibly very much a repeatable setup to get into.
kind of moving your mental stop through the move, right? And then, like, I would argue that the stock actually really started to work well right here, right? Where it really just like, yeah, like it started to work well like this entire move, but like we didn't know if it would have come in here and like stuffed there, like a double stuff, then I probably would have just been out. I would have been like, okay, that's resistance, whatever. But like it started to work so well, that's where you can be like, I'm just going to stick in this until it really tells me. And granted, it's only like 10 cents, but on like a lot of size, 10 cents is a lot of money.
Yep.
So, you know.
Okay, Jeff, I have one last question.
Yeah.
Can you pull up the Carvana example? Yeah. So basically, my question is, when I'm trailing something to the short side, it was interesting that you brought up like once you see that higher low put in. The way I kind of trail these is wait for the lower highs to be broken, because I feel like a lot of times you can get a higher low put in, but you don't break the lower high and then roll over. Which one was the example?
So you don't make a higher low or a higher high.
Correct.
Okay.
Which I had never thought about, like using the lower low, and it makes sense, but I feel like until you break the lower high, the trend's not actually over.
That's true. That's a good way to look at it as well. But I don't want to. Where's the first time we make a higher high?
I think 1107 was kind of the one where, okay, maybe you put in a higher low.
A higher high. You mean a higher low?
Yeah.
Right here.
Like I feel like the higher lows are hard to define, whereas like a lot of times the lower highs can be much clearer to me.
The higher lows can be much clearer, or higher highs can be much clearer. Is that what you're saying? Yeah, I think I get what you're saying. But here at this point, it's like I would never feel like
And
that's
they
a higher
confused
low
me,
right
I'll tell
here.
you
That's-
that.
It's still in a consolidation. Like I want to see an actual pop up, and then an attempt that
Miss
looks
you
like
on
it's really
Trader
low. Like that's
TV,
just
bro.
consolidation sideways, like teeny tiny pop. Like I
don't miss
don't
working
do
there, I'll
that
tell
at
you
all.
that.
I guess I never would have even considered that being a higher low.
Yeah.
Like maybe if it would have popped up from there, but like that would have been a weird higher low given this
Yeah.
sort of price action.
Yeah, that's not a good example, but just in general, I feel like you might be able to put in the higher low, but still be making lower highs and continue with that trend.
You can, and you can say that I'm going to use the higher high concept, which I guess would be stopped out here, right? That looks like the first time we actually put in a higher high, or do we do it here? I don't know. It looks like maybe right here.
Yeah.
I always think about it like, you know, I need the buyers to beat me,
Mhm.
right? And the buyers are going to beat me by putting in a higher low. That's it. And
Okay.
it's from trading.
I
these on
can
earnings trades for
understand
the
that
most part.
logic.
Like earnings trades, you'll see.
I can
okay, it
vibe
looks like
with
maybe
that
it's a higher
logic.
low. Okay, it's not. It looks like maybe it's a higher low. Okay, it's not. And they just keep selling it and selling it and selling it all day long. And those are trades that I want to stay in as long as I possibly can. And the reality is, like, when it is the first higher low, the tape actually feels different a lot of times. Like you actually just, like, it seemed like that in Tesla just now, like just before I came in here. So this, Carter, right here, this is what I'm talking about. That price action just feels different, right?
Yeah,
Like you can even see it in the chart when it puts in a higher low. And I know this was like lower high, slightly higher low, like all that stuff. But this sort of feel where it like breaks and then the buyers are like, yeah, you're done. Like that sort of feeling is like when you're short, you're like, oh crap, because you know that it's the higher low. So this is not a good example technically, but like that feeling is what I'm talking about. Where everybody's like, okay, this is going to go make a new low. And the buyers just like step in. You can see the quickness of the response.
I understand
right?
what he's saying, but yeah, very situational again over here.
All right. Any other questions, thoughts, comments? Take these and study
The whole
them. They are
market
very
is a
different
situation.
types of moves. I promise you, if you don't try and apply them to all of your trades, think about which ones would work for which trades.
Yeah.
To answer your question, Ozzy, I think that that's really the appropriate thing. And that's why we try to classify them as momentum, trend, and then trades to hold. Because if you're expecting momentum, then think about using a momentum exit, right? If you're thinking about trends, think about using a trending exit. If you're thinking about a trade to hold, thinking about the bigger picture trade to hold, right? And I think if you just focus on these three categories and understand the times that you're going to apply these, you'll find, if you guys find 2 or 3 trades a month where you can double your P&L without doing anything, like think about the confidence boost that you can get from that. Like how much skill development you can have just from that, right? And like, what's the worst case scenario? You use the wrong strategy and you make as much as you would have made otherwise. Like, you know, this is just like trying to capture real upside. And so I think that there's something kind of special in being exposed to these at least. And that's why I wanted to do this, is just expose you guys to this. And, you know, I think that we've certainly seen a lot of greatness in trading, but we've seen so much rigidity when it comes to my exit was here, my exit was here, my exit was here. Oh man, that thing ran for so long afterwards. Well, then instead of just bitching and moaning about it, arm yourself with one or multiple of these strategies and take advantage of it next time.
Yeah.
Because the market
That's the
isn't
point of
asking
watching
if
this
you're in
video,
or out
because
of
all I
position.
do is
The
bitch and
market is
moan
going to
about
do
how
what it
much
is
my
going to do.
moves
The
are, and
stocks
this
are
is
going
the
to
way
trade the way they're
to
going to trade.
improve
Your
1%.
job is to take advantage of the opportunities when they are present. And this is a way to take full advantage of an opportunity when it is presented to you.
So you're an active trader, not
All
doing as well as
right.
you want. Not
Thank
doing
you, SMB Capital, for another awesome video. For educating us with exactly different forms of exiting, the momentum exits, the swing exits, the to hold trade exits, all of which I kind of needed a refresher on. So I obviously enjoyed watching those. Hopefully you guys did too. As for the next segment of the show over here today, I think we've been live for how long now? It says an hour and 45 minutes. I don't think that's true. But let's get going to the next segment over here. Quickly talk about the stocks that are on board for this week. Ladies and gentlemen, the earnings week is in. It is very, very hot. We got Netflix, Tesla, Intel, airlines like United, American, Visa coming out with their earnings report also at the end of the week. We got RTX, Raytheon Technologies, Johnson & Johnson's, GE, 3M, lots of companies all across the board over here coming out with their earnings report this week. We are looking for an excited week, especially with how the S&P 500 and the QQQ ended at the end of the week to wrap off, going into the all-time high. I mean, beautiful move on the S&P 500, getting above the all-time high, going into 480. The QQQ going into the beautiful number of 420, and actually a little bit higher than that, but we're gonna stick to that price of 420 at the moment. Ooh, 420 on QQQ, ladies and gentlemen. So gotta love these moves over here overall every single day. Now we're just looking for even more breakouts for the north side, especially for the stocks. So what did I do seeing these stocks play out that way? I scanned through the all-time high scanner on TradingView. I do have trade ideas, but I just lost my password. My password is written on my book at the workplace, which is obviously at the workplace. So I don't have my book at the moment to log into trade ideas. So we're going to use TradingView as a scanner to scan for stocks for the stock, at least find some of the stocks that I might be interested in, the ones that are doing volume near all-time highs that are on the watch list for tomorrow. Let me quickly show you what the watch list for tomorrow looks like. Not sure why this app is now all of a sudden in dark mode, but hey, I'm not going to complain. We got it in dark mode. But yeah, you see some of the stocks over here, some of them that were in play from last week, such as Boeing, TSM that reported earnings, AMD broke out all-time high, Nvidia has been breaking out all-time high, SMCI with an insane 30% move to the north side, AMAT, all, I'm pretty sure you can't see, oh, you can, all NRG, Microsoft, Meta, basically most of these stocks, either tech stocks, either semiconductor stocks, or stocks that are near all-time high, is on our watch list for tomorrow, and that's what I'm looking forward to, especially if the markets are going to keep going up. I want to see if these stocks have some juice behind it. Why don't we start off with going into TSM, not into its all-time high, at least I don't think it is. Yeah, not into its all-time high, but at least at its 52-week high, and the earnings report has been pretty monumental for the stock taking into the north side. We did break out the earnings day high too, so the question is, does the stock have a bigger room? That 115 area now coming into question. I do like how the stock showed a lot of buying coming into somewhere around, I think this is at the open. Yeah, right around where the earnings day open was. The stock ended up finding a lot of buying right around 112 or so 112 area, which was in our notes. If you guys remember our notes from Wednesday night going into Thursday, or sorry, was it Thursday night going into Friday, we said that 112 area is very, very, very important for TSM. We technically don't want to see the stock below 112. That's exactly how the stock ended up playing. It ended up holding that 112 111 area and ripped to the north side to 115. So congratulations to anyone who took that long. But for tomorrow, interested to see how the stock would play out. Let me just quickly move a couple of my, nope, that's not the one. Move a couple of my indicators over here to the right spots, and then we can now zoom back out to maybe no, we can be here. So this is the day one move, this is the earnings move over here, day one, day two. Overall, we would basically not want to see the stock below 112 again. We are kind of in, I think if the market still breaks out to the north side, TSM could join the party. TSM could easily join the party and start looking for a move above 115. So looking for any sort of pullbacks to buy into on TSM. So I'm just going to put that in my notes. Looking for a day three, day one, day two, yeah, day three move. If market is bullish, get bullish on TSM. Bang. For support area, I'm looking at that 111, 112 still, so I'm just gonna put 111, 112 for support. For resistance, we're just gonna put in yesterday's high around 115, and we're gonna put for biases, we're gonna put bias bullish above 111/112, bullish above 115, and not really looking to be too bearish on this position. I mean, the earnings report was a banger, and also if you look at what happened with SMCI on its earnings report, I mean, that was an insane move. No one really saw that one coming. We kind of prepared for the stock to go into its all-time high, but I'll be honest, I did not expect the stock to go into its all-time high and do this big of a move past its all-time high. So I guess that earnings report was clearly that big of a banger. Oh, sorry, it wasn't even an earnings report. It was just an upgrade on their earnings report, if I remember accurately. And look at the amount of volume the stock brought in, and the boosted market cap the stock had in itself after that upgrade. So clearly look for a pullback into this 400 area. You'd basically want to see 400 holding. It held 400 originally on the pullback. This is the 30-minute chart. We can even go to the 5-minute chart to see that hold a little bit more clearly. Right there, that 400 hold on the 5-minute chart. We break above 400, pull back, and double bottom hold the 400. That's kind of where the earnings anchored VWAP is too. So I would want to see SMCI holding 400. That's my first area of defense. That's my first area of support. The next one will be somewhere around 385, and then if it's under 400, to be honest, I kind of don't even want to be thinking about the long on this trade. But based on the amount of move that the stock had, there could be an opportunity to get a monster reversal back into the previous all-time highs of 350, and then find buyers back into that 350 or get a rip. But in my opinion, it needs to do that at 400. If people love 357 that much and they kept chasing the entry above 357 to 380 to 400, I want to see 400 get respected. So bias bullish if 400 can hold, but if it can't, not really looking to sell, not really looking to short unless a clear pattern and an actionable defined risk for SMCI. So looking out to see what type of opportunity SMCI has tomorrow. I'll also mention a couple other stocks like ALL, Allstate. I was gonna say All-Star, but Allstate. Allstate on the watch list, also breaking its all-time high. Very muted move above its all-time high, so I'm interested to see if the market is weak tomorrow. Maybe we can join Allstate for a nice little short opportunity to the downside and ride it right back into the previous all-time high ranges over here. So we got some ideas for the long side for if the market's bullish, like TSM, SMCI, and so on, and some opportunities now that we're scoping out for the short side just in case the market's bearish. That happens to be Allstate. So watch out for Allstate over here. Quickly, we're going to go back to the positive note again. NRG. NRG has been creating a little bit of a consolidation over here into the 52-week high, into the all-time high, right below, what is this, $50 and near 53, 54, 52.50, sorry. So watching to see how 52.50, 52.54 area can come into play tomorrow. Let me just quickly zoom out for you and show you that that is the all-time high on that position. position. So once again, if the market's breaking out, there's a good chance this stock that pushed into its all-time high could also look for a move to the north side, pull back and test for supports in these areas. Maybe we pull back and look for supports intraday and then break out of the all-time high, which looks even better for me. So I'm interested to see what type of moves NRG comes in. A couple other stocks that are at all-time high or recently broke all-time high. I was surprised by this one, McDonald's. I thought the Ozempic pill or the Ozempic, not pill, was it a pill or an injector? I'm not sure if it was a pill or an injector, but whatever it is, hurt McDonald's quite a bit, hurt Walmart and a bunch of other stocks quite a bit. But now look at McDonald's now. McDonald's all the way back to the north side, all the way back to all-time highs, especially with the help of QQQ and the S&P 500, I guess. So it will be interesting to see how this stock plays out. McDonald's is one of those positions that does bring in a decent amount of volume intraday, an average volume of 2 million. On Friday, it brought in 4 million, so something to keep an eye out for it. But it's a notional value is pretty high, so the spread could be pretty nasty off the open. You might have to wait a little bit, so be careful with that, but something to keep an eye out for. McDonald's, another stock in the same realm near all-time highs that actually broke out with a good volume spike and even better range is Dell. Dell Technologies getting above to the north side, taking out the highs over there and now creating a new all-time high. So watching to see if this one can have a continuation, or does this one have any sort of a pullback for us to short into. So watching Dell over here, make sure you add this one to your watch list. Something that does good amount of volume intraday, 4 million shares average. I think what's that, 10-day moving average? I think this is. What is my average 20-day moving average? Average 20-day moving average 4 million shares, whereas on Friday it actually brought in 9 million shares, so almost 2R of a day on Friday for the stock, especially with the QQQ and the S&P 500 help. But looking forward to see if the stock could have even big of a move up north. NRG should be down in pre-market. Well, even better. If it's down in pre-market, pops up and rejects this pre-market, or sorry, into this all-time high area, beautiful short. Or if it shows you buying into somewhere over here, pushes back into the pre-market high and getting ready to break out through there, beautiful long. Multiple opportunities over here on the watch list to keep an eye out for. So make sure you guys are obviously taking a look at this bad boy. I'm looking forward to see how all of these stocks, even AMAT, which is I believe another semiconductor position, industrial machinery, I thought it was semiconductors, I could be wrong, applied materials, also near its all-time high. So taking a look at this bad boy is also not a bad call for those of you interested for these amazing stocks that are in play at the moment. I only picked the stocks that are doing decent amount of volume. There's a lot more stocks for those of you interested. I'll throw the link to that scanner in the chat, so make sure you go check that scanner out. Feel free to find stocks for yourself near all-time highs that are doing way less volume if you're interested, or doing way more volume if you're interested. I picked the stocks that I think will be good to keep an eye out for, and these happen to be the all-time high ones. Ignoring the ones near all-time high or whatever, going to the large cap right now real quick. We're going into Google because Google has yet to push into the all-time high, but is very close. The reason why I bring this up is because a lot of its peers, partners in crime, whatever you want to put it, Meta, Microsoft, Google, Nvidia, AMD, all have pushed into these all-time high areas. QQQ has been making new all-time high for the past few weeks or so. So taking a look at Google, which has been lagging but is looking like it's setting up for that move, maybe something to be involved in over here for this bad boy to go up there and maybe even a move above that price point. So keep Google on the watch list. Tesla, nowhere close. Tesla has been lagging a lot more. Tesla has been actually even looking like a wedge on the daily chart, if I might say so. I'm just trying to pin something over here. I don't know, maybe something like that. Right, a little bit of a wedge over here, so the wedge could eventually break out. Just let it play out, but something doesn't hurt to keep an eye out on Tesla. Always, it's a stock that does have always volume behind it. Always tons of volume behind Teslas. There may be something to keep an eye out for it. Netflix, not really also near all-time high, but the 52-week high area coming into play, and Netflix also with its earnings on the board on Tuesday, maybe getting ready for some fun. So that's the reason why Netflix on the board, and QQQ and the S&P 500, obviously we just keep on mentioning it every 2 seconds. If you haven't heard it, near all-time highs and actually broke all-time highs. So something to keep a watch on for all of these markets. So ladies and gentlemen, that is the watch list for tomorrow. Very, very small watch list. I'll actually finish up these notes and throw up my notes. Wow, you guys just saw my emails. Now you can spam me. That's amazing. Thank you, Market Chameleon, for doing that. But anyways, we're going over here. What was I going to say? If you guys want to subscribe to my watch list, obviously feel free to go ahead and support me on Patreon. Every Patreon member gets my watch list sent out to you at the end of the night or the first thing in the morning, and you get to look at that watch list. But as you guys see, my watch list is absolutely free. We usually talk about my trades and so on, but today, sadly, as it is getting into 8 o'clock, I thought I was streaming at 6 o'clock. Oh, before we do that, we'll go here. Tomorrow's economic calendar looking pretty dead, so nothing to really worry about. Just keep looking for your trades at the all-time highs, in my opinion, or any other trades that you might be interested in, like the semiconductor industry or some hot industry that you might want to be keeping your eyes out for. Keep an eye out for those and have fun on the market. However, as I was saying, thought I was streaming from 6 o'clock to 6:30, but I was talking to nobody because I forgot to hit the go live button. So that was a big mistake. Did not expect for me to be live till 8 o'clock, but I need to head out. I need to go walk my dog and hopefully be back before this Bills Mafia game is over. So ladies and gentlemen, I'm gonna head out. Thank you for sticking around. Thank you for coming in, and hopefully this will be a new edition every Sunday 6 o'clock, where we plan to prep for Monday and for the rest of the week, and maybe we keep adding some new things over there. Maybe we can bring in some viewers to do some interviews. Maybe we can bring on some other people to do some interviews, which we need to. We did a couple podcasts, but we fell back on the podcast a bit, so we need to go do the podcast too. So stay tuned for obviously a lot more content, a lot more fun, and a lot more money, baby. Let's make that bag. Let's make that trading opportunities. Everyone, see you next time. Actually, see you tomorrow. See you tomorrow, 8 o'clock. Ciao. Good night.